Gold and silver prices slip as markets digest U.S. inflation data. Gold and silver prices are trading lower in early U.S. action Thursday as markets digest the latest inflation and labor market data, while investors remain cautious ahead of Friday's U.S. retail sales report. At the latest reading, spot gold was around $4,393.90 an ounce, down about 0.31%, while spot silver was near $65.07, lower by roughly 0.22%. The moves come as traders weigh a mixed picture from the latest U.S. economic data. Wednesday's consumer price index showed headline inflation rising just 0.1% in July, with prices up 3.4% from a year earlier. Core CPI, which excludes food and energy, increased 0.2% month over month and 2.5% annually. The latest producer price index added another layer of uncertainty.
U.S. final demand producer prices were unchanged in July and increased 4.7% from a year earlier. However, a measure that excludes food, energy, and trade services rose 0.4% on the month and 4.7% year over year. That combination is making it difficult for traders to establish a clear direction for Federal Reserve policy. On the labor side, initial jobless claims increased by 9,000 to 209,000, while the 4-week moving average remained unchanged at around 199,000. So, while the headline inflation numbers appear relatively soft, underlying producer price pressure remains firm. That means the Federal Reserve trade is far from settled. Markets are now looking ahead to Friday's retail sales report for another indication of how strong the U.S. economy remains. The data is scheduled for release at 8:30 a.m. Eastern Time. Interest rate expectations remain a major factor for gold. A stronger than expected economy or persistent inflation could make traders less confident about monetary easing, potentially supporting Treasury yields and limiting gold's upside. On the other hand, weaker economic data could strengthen expectations for easier monetary policy, potentially giving gold and silver another boost. The U.S. dollar is also an important part of the equation. The dollar index is currently steady, while the benchmark 10-year Treasury yield remains around the 4.7% area. Meanwhile, geopolitical developments continue to influence precious metals markets. The Strait of Hormuz remains a major source of uncertainty for both energy and financial markets. U.S. officials have indicated that the strait remains open and under U.S. control, while regional authorities continue to report restrictions on traffic and unresolved conditions surrounding a full reopening. The situation is important for gold because it creates two competing forces. On one side, geopolitical and shipping risks can increase demand for gold as a traditional safe haven asset. But on the other side, a renewed spike in oil prices could increase inflationary pressure and make it more difficult for markets to price in aggressive Federal Reserve easing. Oil prices are currently lower, with WTI crude trading around $82 a barrel and Brent near $87.70. Global equity markets are relatively stable heading into the U.S. session. U.S. stock index futures are slightly higher, while European markets are also modestly firmer. Asian markets were mixed, with gains in Japan and South Korea offset by weaker trading in parts of China and Hong Kong. Now let's look at the technical picture for gold. Gold bulls are currently watching the $4,448 level as the first major resistance area. A sustained move above that level could open the door toward $4,575, followed by $4,666. On the downside, bears will be watching $4,332 as the first important support level. A break below that area could expose gold to further declines toward $4,262, followed by $4,205. Silver is facing a similarly important technical setup. For silver bulls, the first major upside target is around $66.43. A sustained break above that level could put $71.43 and then $72.08 into focus. On the downside, the first key support is around $64.47. If that level fails, silver could potentially move towards $63.10,
with deeper support around $61.42. For now, precious metals traders are caught between two competing forces: persistent geopolitical risk and expectations for easier monetary policy on one side, and sticky underlying inflation, elevated treasury yields, and a steady dollar on the other.
That makes Friday's retail sales report particularly important. If the data shows a cooling U.S. consumer and weaker economic momentum, gold could regain upward momentum. But stronger than expected retail spending could reinforce the case for higher for longer interest rates and keep pressure on precious metals. So, for gold, the immediate levels to watch are 44.48 on the upside and 43.32 on the downside. For silver, the key levels are 66.43 resistance and 64.47 support. The next major move could depend on whether incoming U.S. economic data strengthens the case for Federal Reserve easing or keeps inflation concerns firmly in focus.